Hello, looking to go into buy to let. Lots of conflicting information on buying in my personal name versus my company name. What would you advise? Let me go to an Instagram post that I did on this not so long ago. Follow me on Instagram, by the way. I'm at The Wealth Warren. Post a lot of helpful content, if I do say so myself. Now, should you buy property in a limited company? Now, let's look at these sides. So basically, it's all about what income tax band you lie in as a UK taxpayer. And by the way, get an accountant to advise you on this. But in a nutshell, it all depends on whether you're a higher rate taxpayer or a basic rate taxpayer. Look at your pay slip, your self-assessment return, and figure out what tax band you're in. I think most people know that already, but figure that out first. And on screen here, you can see what the current tax bands are in the UK. And then I talk about when to do it in your personal name. So as I said, if you're a basic rate taxpayer, generally you're better off buying in your personal name because you'll be taxed less and retain more of the rent that you received. Why is that? Because when you buy in your personal name, obviously your income from your work gets taxed at that tax rate, but so does your rental income. So the basic rate tax rate is 20% as far as I'm aware in the UK right now. So when it comes to your rental income, you're going to be taxed 20% of that, which, you know, is decent. If you're a higher rate taxpayer, you're going to be taxed 40% of your rental income. So the clear difference, right? You're going to be taxed 20% more, double, if you're a higher rate taxpayer. And that's when you want to start looking at potentially investing via a limited company. Why? Because rent is taxed at a lower rate when in a limited company, and also you're allowed to deduct certain costs from the gross rent before you get taxed, as we'll see on the next slide. So a worked example, let's assume that your annual gross rent is £10,000 and you pay mortgage annually altogether of £5,000. So on the far left, as a higher rate taxpayer at 40%, column A, that's your rent. You're going to get £10,000 per year in rental payments. Column B, that's after taking away your mortgage interest of £5,000. So you're left with £5,000. Column C, you're being taxed at 40%. Now that is 40% not of your net rent after taking away your mortgage interest. That's your gross rent. So it's very aggressive. So they're taking off £4,000. So you're left with £1,000 in rent. You can already start to see how taxation as a higher rate taxpayer on your rent is very aggressive. And they'll give you a tax credit of 20% of your net rent after deducting mortgage interest. So your income is £2,000, okay? If you're a higher rate taxpayer and you're getting a rent of £10,000 and a mortgage of £5,000. Compare that to a basic rate 20% taxpayer. Similar numbers in columns A and B. So you get £10,000 per year in rent, minus the £5,000 mortgage interest payments. So you've got £5,000 left in rent, and then you're then taxed at 20% of your gross rent. So that's 20% of £10,000, which is £2,000. So £5,000 net rent minus £2,000 tax, you're left with £3,000. They're going to add back that 20%, that £1,000 again. So you get £4,000 net income from your rent. So basically, using this example, a basic rate taxpayer is going to get double the amount of net rent at the end of each year than a higher rate taxpayer would, using this example. Okay, now let's say you're in a limited company. Okay, so you get that £10,000 again in annual rent, you take away the £5,000 mortgage interest, and the current limited company tax rate is 19%. So you're going to be left with roughly £4,000. Okay, at the end of the year, very similar to what you'd be left with if you was a basic rate taxpayer. But me, or maybe even you as a higher rate taxpayer, what would you rather have? Would you rather keep the property in your own name and be left with £2,000 net rent per year, or put it into a limited company and have £4,000? Real simple, okay, choice. And that's why, using this example, if you're a higher rate taxpayer, you're going to want to invest, generally speaking, in a limited company. But of course, get professional advice from an accountant. I'm not an accountant. This is not financial advice. Next question. How does a limited company get a mortgage with no cash flow? You need to buy the property. You need the cash to buy the property outright. So no, you don't need to buy it cash outright if you're investing via a limited company. I invest via a limited company. What you need is a really good broker. I incorporated my limited property company less than 6 months before I made my first purchase. Some lenders might want to see a history of trading and income from the limited company, but not really. What they really want to see is your personal income and expenses. When you buy a property via a limited company, what the mortgage lenders are going to demand from you as the owner of that limited company is a personal guarantee, okay? So that way, from a legal perspective, if your limited company stops paying the mortgage because they are effectively the borrower, they can then go to you for the amount owed. That's how it works. That's really how banks and lenders protect themselves. So get a good broker. You do not need to have a trading history, okay, behind the limited company that's buying the property. Of course it does help, but you don't need to. It's not essential. They will look to you and your personal circumstances. They'll look at your affordability. They'll look at your income. Basically, they'll do all the same work as if you was buying the property yourself in your own name. The only difference is that they will ask you to provide a personal guarantee for the full amount of the mortgage, so that if the rent coming into the limited company doesn't quite pay off the mortgage, or if the limited company goes bust, whatever that can happen that stops the limited company from being able to repay the mortgage, they'll just come directly to you. So they'll ask you to get independent legal advice for that and all that good stuff. That's how it works. It's definitely possible. So get a good broker. Thank you for watching. This year I'm making a video every month to answer any questions that you have for me. So whether you want to know whether you should invest in a limited company or in your own name, whether you should buy a flat or a house, what is the best way to get started in property, or who my barber is, just let me know. You can ask me in the comment section below, on Instagram, on TikTok, and I'll make a video dedicated to your questions. Like and subscribe, and thanks for watching.